Halo semuanya, selamat datang di channel saya. Di sini kita akan membahas tuntas dunia bisnis dan strategi sukses. Jadi, pastikan Anda subscribe. Selanjutnya, silahkan menyimak materi dari rekan saya berikut ini.
Welcome to This Explainer. We're diving straight into the high-stakes world of Indonesian tax bookkeeping today. Specifically, we're looking at exactly what the law demands from corporate executives and business owners, strictly through the lens of the General Provisions and Tax Procedures Law, or UUKP, and the Ministry of Finance Regulation number 54 of 2021. So listen up, because this isn't about basic data entry. This is about understanding the structural integrity of your entire business. Seriously, are your financial records an actual legal shield? Or are they just a ticking time bomb? Because that right there is the reality every single business faces. Too often, bookkeeping gets brushed off as just some tedious administrative chore, something left entirely to the back office. But viewing it that way, incredibly dangerous. Under Indonesian tax law, your financial records are either the ultimate legal shield protecting you against massive liability, or they are a ticking time bomb just waiting for an audit to go off. So here's how we're going to break this down today. First, the definition and urgency of bookkeeping. Second, who exactly is required to comply. Third, the mandatory standards and what's actually inside. Fourth, that massive 10-year retention rule. Fifth, the ultimate compliance test, tax audits. And finally, the sanctions and criminal threats. All right, kicking things off with part 1, the definition and urgency of bookkeeping. So what is it really? Well, the legal definition from UK UPOP Article 1 makes it crystal clear. It's not just hoarding receipts in a dusty folder. No way. The law strictly defines it as a regular, systematic recording process. You're legally required to collect data on your assets, your liabilities, capital, income, and expenses. And all of that must culminate in formal financial statements for the tax year. This isn't just accounting. This is literally the blueprint of your company's financial integrity. Moving right along to part 2, who exactly is required to maintain this bookkeeping? The law draws a super clear line in the sand here. We've got full bookkeeping, pembukuan, versus simple recording, pencatatan. If you're a corporate body, a badan, operating in Indonesia, zero exceptions. You are strictly mandated to maintain full bookkeeping, period. Simple recording, on the other hand, is a special carve-out allowed only for specific individual taxpayers, what we call WPOP in Indonesia. It's really just for smaller operations or independent professions calculating net income using calculation norms. Now, this is a number you absolutely need to burn into your memory: 4.8 billion rupiah. Under PMK 54 of 2021, if you're an individual business owner and your gross circulation, your top-line revenue, hits that 4.8 billion rupiah mark in a single year, game over for simple recording. Crossing that line instantly triggers full bookkeeping compliance. You have to immediately pivot to the stringent corporate standards we're discussing today. Which brings us to Section 3, mandatory standards and content. If you're watching this, do a quick mental checklist for your own company right now. Directly from UUKI UK Article 28, your bookkeeping has to track, at an absolute minimum, your assets, liabilities, capital, income, and expenses, plus totally clear records of sales and purchases. It has to be so detailed that an auditor can accurately calculate the exact amount of tax owed. If your records are missing even one of these pillars, your shield is already fractured. Then there's the how, your accounting method. You're generally looking at the accrual method, recognizing income when earned and expenses when incurred, right in line with Indonesia's general financial accounting standards. Some qualifying folks can use the cash method. But here is the absolute kicker, the prinsip taat asas, or the principle of consistency. You can't just flip-flop methods every year because one makes your tax bill look a little friendlier. Any change needs explicit prior approval. Absolute consistency is the law. All right, on to part 4, the 10-year retention rule. Seriously, 10 years. UCUP mandates that every single book, record, underlying document, and yes, even the digital data from your cloud accounting apps has to be securely archived right here in Indonesia for a full decade. Think about that for a second. You're legally required to keep these files longer than most people keep their cars. So why a whole decade? Well, under Article 28, paragraph 11, it's definitely not a random number. That 10-year rule perfectly matches the statute of limitations for criminal tax investigations. If an auditor comes knocking 9 years from today looking into a discrepancy, and you've shredded those receipts or wiped the server, you were immediately in violation of the law. Next up, Section 5, the compliance test, otherwise known as tax audits. When a tax audit happens, the Director General of Taxes isn't just double-checking your calculator math. They're diving deep to test for iktigad baik, good faith. They want to ensure your records reflect the true, unvarnished reality of your business activities. Remember that absolute consistency we just talked about? This is exactly where they test it. If your books are chaotic or just don't match reality, your legal shield is going to shatter. And finally, part 6, the part nobody wants to face, sanctions and criminal threats. If you fail that audit, if your bookkeeping is non-compliant, missing, or you just refuse to hand it over, the tax authority will calculate your tax using alternative, aggressive methods. And the penalty? A massive 100% administrative increase on whatever tax you underpaid. It's a devastating blow to cash flow that literally doubles the financial damage of your non-compliance. Ouch. But it gets way worse than just administrative fines. Under Article 39, if you intentionally fail to keep books, or you cook the books with forged misleading info that costs state revenue, that's a criminal offense. We're talking real prison time. And if you're a repeat offender within a year, those already severe criminal sanctions are doubled. Like I said at the start, treating this as just an administrative chore is a really, really dangerous game. So let's bring it back home to your own business. Take a hard look at your current setup. Are you capturing every single mandatory element? Are you staying strictly consistent year over year? Are your digital backups locked in for the next decade? Seriously, ask yourself, is your bookkeeping actually ready to face an audit today? If you're hesitating to say yes, well, you might want to call your accounting department the second this is over. Thanks for hanging out with me for this explainer. And remember, when it comes to tax, clarity is absolutely your best defense.